Hi students, O-Levels Online presents the video lecture series for other adjustments of financial statements. In this video, we will discuss the control account, importance, principle, role of subsidiary ledgers, advantages and uses. This video series is helpful for those students who are appearing in Cambridge O-Level upcoming exams, either in June or November, through CAIE or IGCSE or IGCSE 9-1, for accounting 7707, or 0452 or 0985. Let's begin with the lesson material. In this slide, we will discuss the importance of the control accounts. The first point is error detection. Control accounts help in quickly identifying discrepancies between the subsidiary ledgers and the general ledger. The second point is efficiency. They allow for the quick preparation of trial balances and financial statements without having to go through all individual transactions. The third point is security. By separating the detailed transactions from the summarized balances, the risk of fraud or manipulation is reduced. Last but not least, point is reconciliation. Control accounts make it easier to reconcile balances, ensuring that all transactions are accurately recorded. Let's discuss its principles too. In this slide, we will check the principle of control account. The principle on which the control account is based is simple, and is as follows: if the opening balance of an account is known, together with information of the additions and deductions entered in the account, the closing balance can be calculated. Applying this to a complete ledger, the total of opening balances together, with the additions and deductions, during the period should give the total of closing balances. This can be illustrated by reference to a sales ledger for entries for a month. Let's check on the other slide. First, we will put the total of opening balances, the 1st of January 2024. Then, add total of entries which have increased the balances of control accounts, applicable on both control accounts, either sales or purchase. Opening balance and the total increased value entries are added together. Then, less total of entries which have reduced the balances of control accounts, applicable on both control accounts, either sales or purchase. Finally, the total closing balance would arrive. This is the simple principle on which control accounts are working. We should follow during the exam style question too. An important note is that control accounts are sometimes known as total accounts. Thus, a control account for a sales ledger could be known as either a sales ledger control account or as a total accounts receivable account. Similarly, a control account for a purchases ledger could be known either as a purchases ledger control account or as a total accounts payable account. Further, an important note is that a control account is a memorandum account. It is not part of the double entry system. It will be prepared either in the general ledger or in the ledger to which it relates, that is the purchases ledger or the sales ledger. Let's check the role of subsidiary ledgers in the context of control accounts. Subsidiary ledgers play a crucial role in the functioning of control accounts by providing the detailed breakdown of transactions that are summarized in the control accounts. Here's an in-depth look at their role. The first point is detail management. It will explain with the help of the further two subpoints. These are as follows. The first subpoint is granular data. Subsidiary ledgers maintain detailed information about individual transactions for specific accounts, such as each customer's account in the sales ledger, or each supplier's account in the purchases ledger. The second subpoint is control accounts summary. The control account, for example, sales ledger control account, or purchases ledger control account in the general ledger, only shows the summary totals of these transactions, such as the total amount owed by all customers or to all suppliers. The second point is error detection. It will explain with the help of the further two subpoints. These are as follows. The first subpoint is reconciliation. By comparing the total balance in the control account with the sum of the individual balances in the subsidiary ledger, accountants can easily identify discrepancies. This reconciliation process helps to detect errors, such as omitted entries, duplicate entries, or incorrect amounts. The second subpoint is audit trail. Subsidiary ledgers provide a clear audit trail, making it easier to trace and correct any errors found during the reconciliation with the control account. The third point is efficiency and organization. It will explain with the help of the further two subpoints. These are as follows. The first subpoint is simplified general ledger. Instead of cluttering the general ledger with numerous individual transactions, subsidiary ledgers group these transactions together, providing a cleaner and more organized general ledger. The control account reflects only the summary of these transactions, streamlining the accounting process. The second subpoint is focused review. Subsidiary ledgers allow for focused reviews of specific accounts, like a particular customer's account, without affecting the general ledger, making it easier to manage large volumes of transactions. The fourth point is internal control. It will explain with the help of the further two subpoints. These are as follows. The first subpoint is segregation of duties. Subsidiary ledgers contribute to internal control by allowing different employees to handle detailed record keeping in the subsidiary ledgers, while others review and reconcile the control accounts. This separation reduces the risk of errors and fraud. The second subpoint is consistency check. The relationship between control accounts and subsidiary ledgers acts as a consistency check. The summarized totals in the control accounts must always align with the detailed balances in the subsidiary ledgers. The last but not least point is reporting and analysis. It will explain with the help of the further two subpoints. These are as follows. The first subpoint is aggregate reporting. Control accounts provide quick access to the overall financial position for certain accounts, for example, total receivables or payables, which is useful for financial reporting and analysis. The second subpoint is detailed analysis. Subsidiary ledgers allow for a more detailed analysis of specific accounts, such as examining individual customer payment histories or supplier transactions, which can be essential for decision-making and managing relationships. Let's check advantages and uses of control accounts. Control accounts are integral to efficient accounting systems, offering various benefits and serving multiple purposes in financial management. Below are the key advantages and uses of control accounts. The first point is error detection and prevention. It will explain with the help of the further two subpoints. These are as follows. The first subpoint is reconciliation. Control accounts enable easy reconciliation between the general ledger and subsidiary ledgers. Any discrepancies between the control account balance and the sum of individual balances in the subsidiary ledger can be quickly identified, making it easier to detect and correct errors such as double entries, omissions, or incorrect postings. The second sub-point is internal consistency. Regular reconciliation of control accounts ensures that all transactions are accurately recorded, and that the accounting records are consistent. The second point is simplification and efficiency. It will explain with the help of the further two sub-points. These are as follows. The first sub-point is streamlined general ledger. By summarizing detailed transactions into a single control account, the general ledger is kept concise and manageable. This reduces the complexity and volume of entries in the general ledger, making it easier to maintain and review. The second sub-point is efficient reporting. Control accounts provide a quick snapshot of the total balances for key accounts, such as total receivables or payables, without the need to review numerous individual transactions. This is particularly useful when preparing financial statements or management reports. The third point is improved internal control. It will explain with the help of the further two sub-points. These are as follows. The first sub-point is segregation of duties. Control accounts support internal controls by enabling the separation of duties between those responsible for detailed record keeping, like subsidiary ledgers, and those responsible for reviewing and reconciling control accounts. This segregation reduces the risk of fraud and enhances the reliability of financial records. The second sub-point is audit trail. control accounts contribute to a clear audit trail, as they summarize the detailed activities recorded in subsidiary ledgers. This makes it easier for auditors to verify the accuracy and completeness of financial transactions. The fourth point is time saving. It will explain with the help of the further two sub-points. These are as follows. The first sub-point is quick reconciliation. Control accounts allow for quick reconciliation of large volumes of transactions, saving time for accountants. Instead of checking each individual transaction, they can focus on the summarized totals in the control accounts. The second sub-point is efficient error identification. If discrepancies arise, control accounts make it easier to pinpoint errors in specific areas, reducing the time spent on error detection and correction. Let's move to other advantages and uses too. The fifth point is facilitates financial management. It will explain with the help of the further two sub-points. These are as follows. The first sub-point is management reporting. Control accounts provide management with accurate and timely information on key financial areas, such as total amounts owed by customers or debtors, or to suppliers or creditors. This helps in making informed decisions regarding credit control, cash flow management, and budgeting. The second sub-point is monitoring and control. By providing an overview of large accounts, control accounts help management monitor and control financial activities effectively. They allow for quick assessments of the company's financial position in terms of receivables, payables, and inventory. The sixth point is security and fraud prevention. It will explain with the help of the further two sub-points. These are as follows. The first sub-point is fraud detection. Control accounts help in detecting fraudulent activities by ensuring that all individual transactions recorded in subsidiary ledgers are reflected in the control account. Any manipulation or omission in the subsidiary ledger that doesn't match the control account can be quickly identified. The second sub-point is safeguard against errors. Since control accounts summarize detailed transactions, they serve as a safeguard against errors by ensuring that the total amounts in the control accounts correspond to the subsidiary ledgers. This dual recording mechanism helps in maintaining the integrity of financial records. The seventh point is comprehensive overview. It will explain with the help of the further two sub-points. These are as follows. The first sub-point is total account balance. Control accounts provide a comprehensive view of the total balances for key accounts, such as total trade receivables or payables. This consolidated view is useful for assessing the overall financial position of the business. The second sub-point is ease of analysis. Control accounts allow for easier analysis of financial data by focusing on the total figures rather than individual transactions, making it simpler to identify trends or issues in financial performance. The eighth point is support for audit and compliance. It will explain with the help of the further two sub-points. These are as follows. The first sub-point is audit facilitation. Control accounts facilitate external and internal audits by providing a summary of financial transactions that auditors can cross-check against subsidiary ledgers. This ensures that the financial statements are accurate and comply with accounting standards. The second sub-point is regulatory compliance. By ensuring accurate record-keeping and reconciliation, control accounts help businesses comply with regulatory requirements and maintain accurate financial statements. Let's move to another slide. Positively, you got the clear understanding of the control account and its importance and principal understandings, as per your syllabus and examination point of view. If you have any query regarding the lesson, kindly ask in the comment section of this video. We will discuss the contra entries in the context of control accounts in the upcoming video. You can download the related formats and lesson material through the link provided below. Thank you for watching. I hope you learned something new today. If you did, like and share video with other people to learn from it. And please subscribe my channel if you want to see more videos like this. Take care of yourselves. I'll see you in the next lesson. Goodbye.